a good financial advisor almost works like a maestro of an orchestra. And it takes these solo acts of the cash accounts we have and the 401ks and the old IRAs, right? He's able to put them together here so that the sum can be bigger than the overall parts and that these parts can create some synergies together. You know what you know, but man, there's a lot of things you don't know. And what a good financial advisor can do is provide perspective.
Welcome to the Freedom Point Real Estate Podcast, where we talk about creating more time freedom through passive real estate investing. Passive investing in real estate challenges conventional investment wisdom. We are passionate about learning and sharing resources with others who are ready to transform their investing mindset. Quick disclaimer as always, I am not a CPA, I am not an attorney or a financial advisor. This is not financial advice, not telling you or anyone else what to do. The views and opinions expressed in these podcasts are provided for education and informational purposes only and are not necessarily the views of my employer. I'm glad you're here. Now let's dig in. All right. Welcome back, Freedom Point Podcast listeners. Thank you again for jumping into yet another episode of the Freedom Point. So glad you're here with us again today. I've got another amazing guest, as I always do, right? Alan Franks. Alan, welcome to the show.
Hey, thanks for having me.
Absolutely. Looking forward to chopping it up with you today. Alan is an author, a speaker, and a fee-based certified financial planner who provides holistic financial planning services nationwide. Alan, lots of people that listen to this podcast, have, financial advisors, financial planners. A lot of times you can just drive down the street and there's a Fidelity office or a Charles Schwab office. There's plenty of people out there that are willing to talk to you about, different types of investment, options. And before we kind of get into your own personal investing thesis, I'd like for you to maybe give our audience a little bit more color on your background, your journey, what you're focused on today, et cetera.
Absolutely. Yeah. I would say my journey really started when I was probably 13, 14 years old, and my dad got big into Robert Kiyosaki, Rich Dad, Poor Dad, and he brought home this board game that my brothers and I would play ad nauseum. It was called Cash Flow, and man, it was awesome. And the goal of Cash Flow, if you've never played it, by the way, great way to teach your kids about money. And is, hey, get out of the rat race so that you can get into the fast track. And the way you do that is get your passive income higher than your expenses, right? And so that's really where my journey financially began. And I was given the gift of watching my father build multi-generational wealth in one generation, right? Not many people are given that gift. I got to see the work ethic that went into this, the strategy that went into this, right? And he would take me to his meetings with his life insurance guy, with his investment guy, right? And I didn't really know what was going on, but I at least learned how to shake a hand and look somebody in the eye and learn a little bit through osmosis, right? And so when I went to undergraduate at Mercer University here in Georgia, I studied economics during one of the most fascinating times ever, which was that 2006 is when I started, 2010 is when I graduated. And so I was studying economics at a very fascinating time during the Great Recession, and then also looking for a job at one of the most difficult times to break in. So where all this ended up leading is to a commission-only sales job at Northwestern Mutual, like a lot of other people do in my industry at age 22. So I had 2 weeks of training and was told to get after it. And that's exactly what I did for about 5 years. And I learned a lot there. I really did. But I also learned what I didn't want to be when I grew up, which was a commission-only sales guy, right? I wanted to really help people in multiple fields here. And so when I got married, moved to Atlanta, we ended up starting our own place where we really focus in on fee-based financial planning. And the reason that's so important, y'all, is that a lot of people in our industry are either on the investment side or they're on the risk management side, right? So you're going to have somebody that's focusing on car and home insurance or life and disability income insurance on the risk management side. And those are great products. Everybody needs those. But if you go with that kind of financial advisor, it might be like getting into a car with only a brake pedal. You can be really safe, but you may not like where you end up, right? You may not get to where you want to go. Whereas if you go to another shop that's mostly investment, which is a majority of them, they're going to be really portfolio based. And that might be kind of like getting into a car with a gas pedal. hey, it's going to be a hell of a ride, but we may not enjoy it all that much, right? But what I saw a need for was a car that had both a gas and a brake pedal in it at the same time. And if we're going to focus in on risk management and investments, we can drive this car like a Formula One race car, where we're using the risk management brake pedal to help complement the gas pedal around turns, right? And help get the most out of our financial engines. So, as a fee based financial advisor, the reason we consider ourselves fee based is because it allows us to help with every single area of somebody's financial planning, right? Insurance and investments are two very important parts. But what about real estate? What about a simple budget? What about helping you choose your employee benefits? What about tax advantages, right? These are all things that people wish their financial advisor would help them with, but very few are, because most of them are really specialized in one place.
Yeah, no, it makes total sense. And man, you gave me so much to talk about here. But that last point, is really important for people to understand. And that is, when you talk to an investment advisor, usually they're selling a commission based product, right? And so that conversation is going to look a little bit different because they have their own personal, self interests in mind and may not entirely have your interest, in mind as well. But love hearing about your story about reading, Rich Dad, Poor Dad. I think it's Cash Flow for Kids is the board game that you were referencing. I know my kids have played that a number of different times. Getting a lot of your knowledge from your father, who kind of set you on the right trajectory, at least from an education and a mentorship perspective. And you're exactly right. When you told me you got started 15 years ago, I had to do some quick simple math here, and you really got your start during the global financial crisis, right? Which was a really, really tricky and tough time, to get started, in the space that you're in today.
Yeah. I really learned how to become a therapist at that time, right? So, like, as a financial advisor, I feel like half the time I'm doing therapy, whether it's helping people, wound heals that they had created during that Great Recession, or maybe sometimes it's marriage therapy as well, right? Or maybe it's something that they grew up this way and they just can't understand how having debt can be a good thing, right? And that's a lot of us, right? And so, when I started in 2010, I remember we were in a very real estate heavy area, and it was just ravished during this time period. And I was at dinner with one of the wealthiest people in our communities. The person's last name was over every single nice neighborhood in the area, and I remember him getting up in the middle of dinner and leaving. And we're like, what happened? And just a phone call from his mother that was very stern happened, and he just decided to leave. And I just remember being there with the titans of our community that had really lost almost everything, right? And I would go meet with these realtors that used to be making $500,000 a year, and now we're making 60,000, and they were stuck on 6 properties underwater. And man, so it really, I had to learn empathy early on there, and I also had to really, frankly, find a way to find the people who are making money. And so what I've learned is, no matter how dim it is, there's always opportunity out there, and you got to find the opportunity. And frankly, the opportunity's been a little bit harder to find here in this post-COVID environment, right? I remember, shoot, 5 years ago, we opened up 20 Airbnbs in our clientele, right? We had people buying, beach homes, mountain homes, homes near Disney, and it was so much fun. We were making money hand over fist, and obviously that market's dried up a good amount here, if not completely, right? So there's other ways that we're having to get creative here, but there's always opportunity out there, particularly in the midst of chaos.
Yeah, I love that perspective, Alan. I love your abundance, mindset, as well, and your desire to surround yourself, with others that help, level up your game. So, I mentioned it kind of before, but I want to mention again and get your perspective on this. Most advisors, they sell products, and I say they sell products. Your focus, however, on is really on goals and reverse engineering a plan. So what does that process look like for investors in practice?
Yeah. So if you're ever interviewing a financial advisor, and hope to goodness, hopefully you interview me, right? But I would say this: we need to understand how they get paid, right? So when I was at Northwestern Mutual, there was no doubt about it that there was a huge stress to sell life and disability income insurance, and I couldn't stand that model, right? It wasn't for me, right? But it's a model, and by the way, those are very important and frankly good products to have. It's just there's so much more to financial planning. Same exact thing if you go to an investment firm, right? They can sell insurance, right? But that's not how they get patted on the back. That's not how they win their rewards trips. That's not really how they get compensated. So they're going to be seeing things through a portfolio lens, right? And it's unrealistic to think that somebody would be unbiased when you sit down with them. But it's important that you know, as a customer and client, where their biases are, right? So what we started doing is saying, hey, there's so much more to financial planning that we currently aren't getting compensated. How can we create a structure here where we can get fairly compensated for helping people get into real estate, for helping people look at alternative investments, right? And so that's how we created a fee-based structure where we get paid up front to do planning, and we like to introduce our clients to good opportunities, whether that's a hard money lending opportunity, whether that's a multifamily level complex, right? Whether that's a Airbnb at the beach, right? We like to talk to our clients about this stuff because I found that over time, investments are getting more and more commoditized, where a lot of investment accounts kind of start to look the same, right? It's about what are you doing as a financial advisor above and beyond the markets, right? That's really where we come in and add that value.
Yeah, that makes total sense, and I appreciate you breaking that down for our audience. I know that your investor avatar is really around professionals, executives, business owners, young families, really anything kind of in that mix or that demographic. What would you say are some of the biggest financial mistakes that you see your investors making?
Yeah, I would say that. Okay, let's talk about the DIYers here for a second, right? When we start to work with somebody who in the past had been a DIYer, means do it yourself, right? We found that they were probably really good in one area. Let's just call it stock picking. They love the capital markets, right? They're really good in that area, but maybe they never even thought about pricing out their car and their home insurance, right? Or maybe they never thought about what they need to choose as their employee benefits. Or maybe they never thought about getting real estate as part of their financial plan, right? Or let's say that somebody's really into real estate. Okay, great. Well, maybe they've completely forgotten about their 401k and their allocation there, right? And so what we've seen here is in this ever growing complex world, we've seen people become specialists. And next thing you know, the real estate bros are real estate bros. The crypto bros are crypto bros, right? The stock junkies are stock junkies. And they all of a sudden see everything through that lens, right? Well, what they fail to see is sometimes the forest through the trees. They see the trees, they don't see the forest. And how do these trees complement each other, right? And so, as a good financial advisor, almost works like a maestro of an orchestra, and it takes these solo acts of the cash accounts we have, and the 401ks, and the old IRAs, right? And he's able to put them together here so that the sum can be bigger than the overall parts, and that these parts can create some synergies together, right? So that's the biggest mistake I see that people making is, okay, you know what you know, but man, there's a lot of things you don't know. And what a good financial advisor can do is provide perspective of saying, hey, we've worked with thousands and thousands of people of all different age groups, of all different backgrounds, doing a lot of different things. I can introduce you ideas that have worked and also maybe dissuade you from some ideas you have that we've seen that haven't worked.
CEO and co-founder of Rise 48 Equity. Our goal is to help you protect and grow your wealth by investing in large multifamily apartment buildings. We do all the work as far as sourcing these large apartment buildings from the brokers, doing all of the on-site management with our vertically integrated property management company, doing all the renovations with our vertically integrated construction company. We completely rebrand the exteriors. We will renovate the interiors to our full platinum level scope, which increases the value of the asset to get that profit margin for the investor. If you'd like to learn about how you can partner with us on these exciting opportunities, and go to our website and set up a call with our team.
Yeah, it makes total sense. Sounds to me like a much more holistic approach than chasing after that, shiny new object and kind of niching down. What are some of the more overlooked, tax advantage strategies that people should immediately start taking advantage of today?
Yeah, yeah. So I like to say we solve three problems: income tax problems, capital gains tax problems, and estate tax problems, right? And we also have another saying: a good salesman is able to spot a problem, a great salesman is able to fix a problem, but the best salesman is the one that's able to create the darn problem in the first place, right? So we like to say, hey, if you don't have those problems, we like to help you create those problems because they're overall really good problems to have, right? So let's start at the top. All right, let's start with estate tax planning. We assume right now that, and I don't know when the person's going to be listening to this, that the new tax bill that is currently in the Senate here in June of 2025 is going to include a $15 million estate tax exemption. We assume that, right? Not so fast here. Not so fast. I think that the Republican side are really having trouble stomaching the deficits that are going on right now. And obviously, we're going to need to find a way to raise more money to lower that deficit at some point, right? Also, I would say for them to make this permanent, it's going to be really challenging here. So, unless you plan on dying in the next 4 years, right, we are going to have a reset of the estate tax exemption from a very high number of 15 million per person down to about 7 million. Okay. Now, all of a sudden, a lot more people are subject to estate taxes, right? And when you think that your wealth is going to double every 10 years here, all of a sudden that estate tax number will be really big, right? So when you die, your money's going to go to three different places: your family, a charity, or Uncle Sam. And I want to ask you, who do you feel like is best suited to handle that money? Who has shown the best fiscal responsibility out of your family, Uncle Sam, or charity, right? And hopefully you can have at least one winner out of those three, right? So a lot of what we do is on the estate planning side of helping you dictate of where that money goes, helping lower those taxes. Now, that's a future problem. And the problem is that the pain isn't big enough to get people acting. So where we like to focus in on is on the income side. How can we help save money on income taxes, right? Now, here's the good news. If you're a business owner, you have a totally different playbook. My goodness, we put kids on payroll. We can use Augusta rules, right? Let's say you own the building. We could do a cost seg bonus depreciation, which you brilliantly outlined a few episodes ago. I love that episode that you did on that, right? Now, also what we can do too is really focus in on taking your 401k to the next level through something called a pension plan and helping you really deduct a lot of income on that side through different sorts. Could be a cash balance, could be a split funded defined pension plan, a lot of things we could do right there as a business owner. When you're when you're a W-2 employee, obviously, you know about the 401k. I do want to share one idea with you that's becoming a lot more popular, and that's called a mega backdoor Roth IRA. Definitely check with your employee benefits to see if you can do that. Basically, think of a backdoor Roth IRA just with a lot larger numbers and not nearly as much back and forth and complexity on how to do that, right? But we're also a huge fan of utilizing an HSA, but not for health purposes. I'm a big fan of I max out my HSA, I invest the dollars, and then I just let it run. Why would I that's the most tax advantaged vehicle in the IRS tax code. Why would I take money out of there, right? Plus, one of the most biggest expenses in retirement is your health. What if you had a $300,000 to $500,000 account that you could use purely for health that's been growing tax deferred that you can take out tax free that you already got a tax deduction on, right? So the holy trinity of tax advantages right there. It's the only account in the IRS tax code that has those, right? So why wouldn't we max that out, put money in there, invest it, and have that set up to maybe for a long-term care one day or just in general medical expenses in retirement? It's going to allow you to utilize your 401k for a lot more fun things.
Yeah, it makes total sense. I mean, I appreciate that breakdown, and I took a couple of notes here, and going to follow up on some of those points here after the time today. But we have a lot of folks that listen to this podcast. They're higher net worth individuals, right? They're top professionals, and whatever occupation they're in, and a lot of times people just don't have time, right? You probably talk to a lot of people every day that that first call with you, they're just so overwhelmed, right? Because you have a lot of tools in your toolbox, right? So, when it comes to that person that, is feeling financially overwhelmed, where do you really start? Like, what's that first step that somebody needs to take, on their journey or on their path to getting their finances together and building out their wealth journey?
Absolutely. So I think the first thing that I have to do when because by the way, when we're working with clients, obviously we're calling on successful people. And in general, successful people are busy. They do have the ability to make time and they understand that they have the choice to make that time. So what I have to do is I have to start with them with reality. Hey, you're very successful. Congratulations. Right? If you never hire me, guess what? You're still going to be successful, right? But I do think I can get you to where you are, from where you are to where you want to be, in the most cost efficient and tax advantage way possible, meaning I can get you where you want to go quicker. Now, I cannot do this alone. I need your input. I need your buy in here for about a month or two, right? Once we have a month or two, we have the foundation of your financial plan and of our relationship. And from then on, we'll do a quarterly review or whatever as needed. But realistically, I want you focused in on two things: driving revenue and being a family man, right? Driving revenue and enjoying your life. And that's what I'm positioning for, is almost be like your personal CFO here, saying, hey, outsource everything to me here on that level. But I do need about a month or two, because truth is I don't know what to do with your old 401ks if I don't have a statement, right? Like I do, like this is a joint venture here. I can't just do everything for you. But after that first month or two, we really like to say, awesome, great, thank you so much. I know there's been a lot of time. Now you go focus in on driving revenue and being with your family. I've got this.
Is that kind of along the lines of, how you would define, financial freedom, I know that's kind of a buzzword. Maybe you talk about it in your book. I'm not sure where I came up with that, but, financial freedom is a part of your DNA, and, how you help clients, get there faster. Is that kind of what you're alluding to here?
Every single plan we start with the end in mind of, hey, what is the goal? What are we trying to reach? Obviously, financial freedom means something different for every single person, right? And then we help them reverse engineer a financial plan to get there as quickly as possible. When people start seeing money as a tool, rather than this emotional thing that helps drive their lifestyle that they have to have, when they start seeing money as a tool that, when leveraged appropriately, can really help them get to where they want to go quicker and have more fun doing it, right? That is when all of a sudden the doors open up and we are able to discuss really cool topics like alternative investments in there, because they all of a sudden, they don't have this emotional attachment anymore to money. They're looking at it logically as a business sense, and they're like, sure, yeah, let's put 50 grand in there, let's put 100 grand into there, right? And so yes, we are trying to get them there as quickly as possible. And in general, we have to have everything buttoned up to do that in order to get to the point where now we're introducing them to the fun stuff, what I call the fun stuff, which are the alternative investments.
Yeah, makes total sense. And on that lens, I'm a big fan of diversification, and I'm sure you are as well. Whether that, be Wall Street, Main Street, whether it be institutional level investing or alternatives. I'd be curious to know what your view is on real estate as part of a diversified financial plan, and how do you guide clients on maybe active or passive investing options in the alternative space?
Absolutely. So when it comes to diversification, we tell our clients there's three layers of diversification. Number one is actually tax diversification. Way too many people have all their money in 401ks, and it's going to be they're in business with Uncle Sam, right? And Uncle Sam, controls all the rules on that, right? Number two would be asset manager diversification, making certain not all of our money is managed by one company or one fund, right? But the third thing is asset diversification. And it's not hard to do, but most people don't know how to do it. And so when we're talking about asset diversification, I don't want all my money in stocks and bonds, right? It could be, hey, we have our stocks and bonds, we got some life insurance, we got some real estate here, we have some business interest here, right? And then diving into the real estate side, it's which side of the balance sheet do we want to be on? Do we want to be lenders and do some hard money lending? Do we want to be the owner, right? Do we need more income right now in our stage of life, which is very taxable income, right? Or do we want to have more ownership that has some tax advantage and tax deferred growth on that, right? So it's helping them understand how, hey, if we're going to look at alternative investments here, how does the real estate fit into your situation right now? For instance, you might have two kids. It doesn't mean age, by the way. Of course, if somebody's retired and they need income, maybe lending money is a bit more appropriate than having ownership in it, right? But maybe somebody has two kids in daycare right now and they're suffocating and they need some extra income right now, right? So it really is dependent. And then maybe their kids get out of daycare and all of a sudden they have extra income. They don't need that income. Maybe we can do more ownership now and grow that over time, right? So it's understanding how real estate can fit into the overall needs of right now, but also the big challenge with private placement and alternative assets is diversifying, because if you give me 50K to put in the market, I can go get you 500 stocks tomorrow, probably 5,000, right? But when we're looking at doing a private placement, a lot of times there's minimums of 50K to 100K. So we almost have to build our own ladder here, and diversify multiple ways. And one of those is understanding both sides of the balance sheet, meaning lending and owning.
Yeah, I love this. It's a breath of fresh air to be talking to you, because you're able to, coach your clients on different types of investing strategies that are not just all centered on, one thing, and that is, mainly Wall Street investing. I'm going to throw you a curveball.
Yeah, man, do. Let's have fun.
So what's maybe one or two things on your personal bucket list that you want to check off between now and the end of the year or beyond?
Now and the end of the year. Yeah, okay. I've got one, right? I thought you were going to be now in lifetime. I was like, oh, I want to do a Nile River cruise here. All right, the end of the year. So my wife and I, we own 6 rental homes. Okay. And some are long term, some are executive rentals, some are Airbnbs. And we have an 18-month-old daughter, and we've got a son coming in July, right? So we are looking. I never thought I'd say this, particularly on a real estate podcast, but we're looking to simplify, right? A tale as old as time. Somebody gets into residential real estate, they get too many, but not enough to really have a full-time manager. They get burned out, right? So one of the things is I'm looking to sell a duplex I've got. And then what I'm going to do with that money, right, is I'm going to reinvest it in the market, right? Your normal capital markets. But the way I like to invest in real estate is I never directly invest my money in real estate. I invest my money in the markets. It's going to double every 10 years or so by the rule of 72, right? If we average 7% rate of return. And then I have a line of credit against my investments. Right? And I'm going to borrow 50 cents on the dollar, and I'm going to go do some passive real estate investing and some funds with that, right? So that way, the beauty of real estate is leverage, right? I put 50 grand down on this thing, and it grew from 550 to 750. That's a heck of a rate of return on 50 grand, right? So when I look at this, I have to say, what do I think it's going to grow to, and how do I beat that in a more passive and easier model, right? So we're looking to sell. We would then invest the proceeds in the market, borrow 50 cents from that to go do some alternative investment.
That's smart. And I do that strategy that you just outlined there. I know the folks that regularly listen to this podcast have also heard me say that I do the same. And those that have read my book, The Fundamental Investor, I do niche down specifically on that topic of kind of leveraging, investments and, using the same investment dollar in multiple different investments at the same time as well. So I appreciate you saying that.
That's how wealthy people invest. Wealthy people, when you see a headline that Beyonce bought her house for 50 million bucks cash, right? Now, to be clear, I'm not Beyonce's financial advisor. I would love to be, right? But when you hear that headline, yeah, it seemed like cash, but Beyonce has the ability to make so much money on 50 million bucks. That would be a really bad use of $50 million. Now, maybe she did just have that cash and just go do it. But in general, wealthy people, they're going to invest their money. They're going to borrow against it to go invest in real estate and businesses, right? Now, all of a sudden, instead of $1 working for you, you have $1.50. But here's the deal. You don't have to be wealthy to do this, right? You could do, if you have $100,000 in a brokerage account, shoot, if you've got equity in your home. We can use a home equity line of credit for this. What I've been talking to you about is something called a securities-backed line of credit against your investments. If you have a life insurance policy, we can get an insurance line of credit, right? So there's all these different ways that we could leverage some of our money in order to leverage other people's time, expertise, knowledge, hard work, right? And so that's what I like to do. I'm kind of over the buy the rental home and run it yourself model. I was over there last night, Saturday morning, putting a new couch from IKEA together. I'm kind of over that model, right? So now I'm really leaning on more passive investments.
Yeah, no, I love that. I always say that the seventh wonder of the world is compounding, and the eighth is leverage.
Yes, I love that.
This has been just a fantastic, conversation, Alan. I've really appreciated, the time that we've had to spend together, and look forward to obviously continuing to further my relationship with you. But before we leave, I'd love to leave my audience with one or two different ways that they can connect with you to learn more about what you're up to.
Great. Yeah, I would say the best way is my book's website, empowered-money.com, empowered-money.com. If you go there, a couple things. Number one, obviously, you can buy my book there that outlines everything we just talked about. You can also schedule a complimentary meeting directly with me. And you can also do a 10-minute free financial plan. It's so important for us to audit where we are financially, right? It's not like a scale that we could just stand on to tell us our weight, right? It's always fluctuating. So it's really good to audit exactly where we are. So that's where I would tell you to reach out to me, is empowered-money.com. But honestly, I love chatting about this stuff. I want to give out my cell phone number today, if that's okay. Just give me a call, right? So my cell phone number is 706-202-6424. It's been the same number. This first number I've ever had, never changed, right? It's not my work line. That's my personal cell phone number. I love chatting about real estate, about tax advantages, about financial planning. So if anybody else, has a question or just wants to chat, 706-202-6424.
Great. Well, we'll definitely put that in the show notes for today's episode. And Beyonce, if you're out there, all right, you got the number to call.
Come on.
Bring it on. So at any rate, Alan, this has been wonderful. Thanks for your time today.
Thanks so much for having me.
Absolutely. And listening audience, thank you again for jumping into yet another episode of The Freedom Point. So glad you joined us again, and look forward to having you join us on the next episode.
Thank you for hanging out with us today and for listening to the Freedom Point podcast, powered by Starting Point Capital. This show is for entertainment purposes only. Nothing said on this show should be considered financial advice. Before making any financial decision, please consult with a professional. This show is copyrighted by the Freedom Point podcast. Written permissions must be granted before syndication or rebroadcasting. If you're interested in connecting, you can find contact information at startingpointcapital.com.